Good afternoon. Last month we came and told you that we may be in a possible risk-off situation during August. As it often happens in August, little volume, a lot of volatility, and we've seen equity markets correct. The question is now, at the end of this month, would it be a good idea to re-enter the market and buy the dips? We will have a look at the different arguments today. First, we go into our FinGraphs platform and look at the S&P 500 on an hourly chart or the perspective over the next few weeks. As you could see from the beginning of the sell-off towards the second week of August, our trend indicator is in a bear downtrend. Our targets calculation are still showing some potential downside into 2419, where we were almost this morning, down to possibly just below 2400. The risk index is already oversold, but we will really need it to start slowing down, reverse, and leave the oversold zone. So in this situation, you're still on a downtrend, you're getting towards exaggerations, but it's probably another week or so left before you could settle down and start rebounding again. Looking at the daily chart, it is quite overbought. You can see that the risk index is in the overbought area and that our envelopes are touching each other. Our targets still show some potential over the next few months, but we are in a very extended market. These are impulsive 2 targets, our most extended measure of price targets. They can lead us up to above 2500 and possibly, in extreme cases, up to 2600. That said, we're currently correcting at the moment, and the hourly is going to be important to watch to understand if there's an opportunity for a last move up here. On a weekly chart, a similar situation as with the daily. You're still in an uptrend which is showing some exaggerations, but we cannot confirm that it's over yet. You can see the risk index is now in the overbought zone, our envelopes are touching each other, but our targets do have the possibility to still lead us above 2500, and that is over the next few quarters. So generally, when we look at all 3 charts together, the weekly, long-term, the daily, medium-term charts are still in uptrends. They've made an intermediate top, but they should resume their uptrend. The risk-reward is getting unsatisfying, but they are still heading up. And so the hourly is correcting down and should reach by the end of the month a possible oversold situation. That oversold situation may be an opportunity to catch a last move up here on the daily and the weekly charts. Now looking to Europe and to the Euro Stoxx 50, the Euro Stoxx 50 has also been correcting down. The consolidation started earlier in July and it is approaching the oversold zone. It's not quite there yet. On a target basis, we would still have the possibility to correct down towards 3,381 down to 3,330. That's circa 2 to 3% lower as where we are today. Now looking at the daily to get a bit of scope, the correction actually started early May and has been consolidating down for a bit more than 3 months now. It has reached our corrective targets, yet never was able to break below them. So it seems like the move since May, for the time being, must be labeled as only a correction, leaving the door open for another move up in the future. That said, if we were to move below 3,350 or below a corrective target, that would open the door to more aggressive targets to the downside and would put the general uptrend that we've seen over the last year or so in danger. Looking at the weekly chart for this longer term perspective, we're no exaggeration at the moment, neither on our risk index, neither on our envelopes, and we're still in an uptrend with potential price targets which are quite a bit higher, between 10 and almost 25%. That said, we will really need to see on the daily the situation resume its uptrend before we can confirm that. So looking at all 3 charts together, it's still quite promising on a weekly basis or over the next few quarters, with quite a bit of target potential. The daily has been correcting down and seems to have found support, but it will need to hold that support to be able to confirm that we can resume the uptrend. And within that support, we believe that over the next couple of weeks, we should be able to find an oversold situation between 3,350 and pretty much mid 3,300. That may be an opportunity to resume the uptrend. Now the euro, as we see, has been consolidating for 3 months, and it's been weaker than the S&P because of the stronger euro. Now there's 2 reasons why the euro stocks could actually resume its uptrend. Either equity markets are in general very strong, or the euro weakens a bit. Now we'll look at the euro first on a weekly basis or the perspective over the next few quarters. It has been correcting up since December last year. It has reached the initial level of its corrective target, but it could still extend over the next few quarters, possibly into the lower 120s. So this correction up, we cannot confirm that it's over yet. Now looking at the daily chart, we're also still in an uptrend. We've seen a slight consolidation here, and our targets are still showing that we can make it at above 120 over the next few months. We're a bit in an exaggeration at the moment, but in general, this uptrend is still in place. Now looking at the hourly, we've seen some consolidation during August. It hasn't really done much in terms of price movement, and it is now back in an uptrend, with the possibility over the next few weeks to move back up above 118 and possibly even make new highs till 119. So if we take it all together, we're still in a correction up on the weekly. The daily move up doesn't seem over and could extend another couple of months, and the hourly has seen a slight consolidation and could already be starting to move up again. So if we need to see equity markets and especially the euro stocks keep moving up, we're going to need to have a strong move on the US markets. Now, the canary in the gold mine for a positive scenario on equity is gold. And gold at the moment is in a sideways consolidation up. It had a strong move last year, but it's been mostly retraced, and it's trying to establish another up move. That said, our envelopes are heading down, and the downtrend is theoretically in place with a bear figure in here on our weekly chart. Now looking at the daily, we could see these attempts to resume into a strong uptrend. We failed already twice between 1295 and 1300. We did go slightly on Friday above 1300, and at the moment this resistance has proven very strong. We're not quite in overbought yet, but we are quite high on the spectrum, and if we were to break above, then the move could extend into the 1340s up to 1400. But at the moment, this resistance is really what we need to go through to confirm that. And as long as we haven't done it, it's really a bull case still on risk assets. Now, we may extend very rapidly and go into the lower end of these targets, but if we can't really manage to accelerate too much, we would still see it as only a correction up in a long-term bearish trend. Now looking at the hourly, we quite extended, our impulsive targets have been done, our risk index has been overbought, and our envelopes are touching each other. That doesn't exclude the last move up here, but it does tell us that we don't think it's going very far. So looking at all three together, it's a downtrend, a neutral downtrend on the weekly, a daily which is heading up but which is having problems in breaking above its resistance, and an hourly which seems quite extended. So at the moment, it doesn't at least contradict the possibility of a low on equities to move higher into September. Now also looking at gold in euros, we get a better picture of the risk on risk off situation. The dollar has been very weak and has probably skewed gold to the upside. And we could see that at the moment, the long-term weekly chart is still correcting down. The daily chart is still in a downtrend and not yet oversold. And the hourly chart has been correcting up over the last few weeks, but is slowly getting to a point where it could get exhausted. If it does turn following that point, it's probably a resumed downtrend for gold in euros, and meaning that we're back into risk on. Finally, another element which we find encouraging in the market is the price action of oil. Oil did start rebalancing from the beginning of last year, and made an intermediate top earlier this year, followed by quite a strong retracement into June, as you can see on our daily chart. The June low was quite oversold and created quite a nice bounce here. The possible targets over the next few months are into the 60s level, which is very promising. And at the moment, an attempt to retrace here during August has been ended last week, and we are possibly already resuming the uptrend. So if three bulls, we're quite positive that the oil market is showing signs of rebalancing again and could move higher towards year end. That would be quite positive for generally reflation trades and possibly equities. Thank you very much and have a good week.